Problem number 2. In this, we will discuss about contribution income statement and computation of break-even units. Computers make an oak desk especially designed for personal computer. The desk sell for $200. Data for the last year's operation follows. Number 1, units in beginning 0, units produced 10,000, units sold 9,000, units in ending inventory 1,000. How I calculate units in ending inventory? 10,000 is produced and sold is 9,000, so the remaining on hand or ending inventory, that is 1,000. The variable cost per unit is direct material 60, direct labor $30, variable manufacturing overhead 10, variable selling and admin expense 2. Total variable cost per unit is $120. Okay, fixed cost, fixed manufacturing overhead 3 lakh, quick selling and admin expense 4 lakh 50. So the total fixed cost is 7 lakh 50,000. Okay, just want to tell you about first fixed manufacturing overhead. Here is the cost which is in total amount, right? There is not a per unit cost, right? These two costs are in total. Fixed manufacturing overhead and fixed selling and admin expense. Okay, what is the requirement of the questions? Requirement number 1, assume that the company uses variable costing. Companies uses which method? The variable costing, and compute the unit product cost for one computer desk. So what is the requirement of 1? We need to calculate unit product cost, right? Then as second requirement and the third requirement. First we will calculate the requirement number 1, unit product cost under variable costing method. So unit product cost under variable costing, we know that direct material, direct labor, direct material, direct labor, and yes, what? Fixed or variable? If we are talking about variable unit product cost, so we will take only variable portion of manufacturing overhead. Variable manufacturing overhead, right? Variable manufacturing overhead. Variable manufacturing overhead. Okay. What is direct material? Direct material 60, labor 30, and variable manufacturing is 10. So 60, 30 and 10. I write here 60, 30 and 10. So my unit product cost under variable costing is 100, right? So my per unit product cost is 100. I hope is it clear? Now we will move towards the second requirement, right? First we need to calculate the unit product cost. The unit product cost is 100. We have calculated. Okay. Assume that the company uses variable costing. Prepare a contribution format income statement for the year. Okay. What is the requirement here? We need to prepare a contribution format income statement. How we will prepare the contribution income statement? Contribution format income statement or the variable costing income statement. ठीक है, contribution income statement or the variable costing income statement. First, sales. The first element is sale. Calculate the sale. Okay, how many units are sold? 9,000 units, right? And the per unit selling cost is $200, right? Here you can see here the desk sell for $200. So my selling price is 200 and the company sold 9,000 units. So take 9,000 in the form of units and the per unit cost is $200. So we will compute these two. 9,000 multiplied by 200. Okay, my sale price is this. Okay, यहाँ हम क्या करते हैं, less less variable, all variable cost, subtract all variable cost. But we first need to calculate variable cost of goods sold, right? Variable cost of goods sold. So what is the variable cost of goods sold and how we can calculate the variable cost of goods sold? First, take beginning inventory. My beginning inventory. Okay, take first beginning inventory. My beginning inventory is 0, right? How I found? Look, beginning inventory, units in beginning inventory. If units in beginning 0, it's mean my inventory is 0. Okay, what I will do? I will add. What I will add? Yes, the variable manufacturing cost. Add the variable manufacturing cost, right? Variable manufacturing cost. How I will get the variable manufacturing cost? Very easy. How many number of units are produced? 10,000 units, right? Check in the question. How many units a company produce? The 10,000 units. Okay, take the 10,000 units, and what is the manufacturing cost? Manufacturing product cost or the unit product cost, that is $100. How I got this value? Check your variable unit product cost, that is 100, right? So from where I got this 100? I got from above, where I have calculate the unit product cost and the variable costing. Multiply these two values, units into per unit cost. The value is this. Okay, after calculating variable manufacturing cost, add them. Goods available for sale. So my goods available for sale is this value, beginning plus manufactured, right? This is a pattern, that's why I'm writing in full way, so you can easily understand that. Okay, after calculating goods available for sale, less what? Less ending inventory. And my ending inventory is, remember, 1000 units. How I found this 1000? You can see here, the company produced 10,000 units and sold 9,000 units. So at end or on hand, they have 1000 units at end. So I will add this 1000 multiplied by shift $100, right? Why I again took this $100? This is our product cost under variable costing, right? So we will take this value. Okay, what is this value? After multiplying 1000 units into 100, my value is 1 lakh, right? So what is my variable cost of goods sold? My first value is variable cost of goods sold, right? This is my variable cost of goods sold. What is my variable cost of goods sold? Goods available for sale minus ending inventory. This is my variable cost of goods sold, right? So we have found the one value, right? I can say here this is my A, right? A. First, I calculate the variable cost of goods sold, right? You know, in contribution income statement, what we do? Sales less what? All variable expense, right? And then we got contribution margin, right? We know it very well. Okay, so my second variable expense is, see in your chart, see in your question, my second variable expense is variable selling and admin. This is 20 per dollar, right? It's mean, and total units sold is 9,000. So my variable selling and admin expense is or becomes 5,000 units sold or 9,000 sold. I think 9,000 sold, right? And per unit price selling is $20, right? Take these values. So what I got, my second variable expense, that is 9,000 multiplied by 20, right? 1,80,000, right? Okay, this is my contribution margin, right? How I calculate this? I put the formula there. Contribution margin, right? This is my contribution margin. How I got my contribution margin? See, look here. Sales less variable expenses, right? Variable expenses. Here we have two types of variable expenses. One is variable cost of goods sold and another one is variable selling and admin, right? So after deducting all variable expenses, I got contribution margin, right? Okay, understand. After contribution margin, we subtract fixed expenses, right? Fixed expenses. And what is my fixed expense here? See in the question, less fixed expenses, right? Fixed expenses. Okay, fixed expenses, we have two type of fixed expenses. How I got? Check in the question. Fixed manufacturing, fixed selling. We will take both expenses as well. Take both expenses right here, right? Both expenses is there. Fixed selling and fixed manufacturing. Okay. After deducting these two from my contribution margin, I got net operating loss. This is not my profit, right? This is my loss. How much? 30,000 loss, right? So here we have calculate the contribution income statement, right? Or net operating loss. Net operating loss, right? Not income. Contribution and then both expenses, right? Both expenses. Which expense? Fixed expenses, right? Remember this point. These all are my fixed expenses. Fixed manufacturing, fixed selling and admin, right? So I got my net operating loss, right? Okay, remove it. And now the third point is, what is the company break-even point in term of unit sale? What is the company break-even point in term of unit sale? Okay, look here. break even formula, break even unit sale equal to fixed expenses divided by unit contribution margin. So first calculate the fixed expenses. Again I am taking these two values because these are my fixed expenses, right? Check. Total fixed expenses is total fixed expenses. So we have calculated total fixed expenses. So my total fixed expenses are 7,50,000, right? Okay, unit contribution margin. For the unit contribution margin, take selling price per unit. We have done in CVP in detail, right? My price was $200. How I got this price? Check from my question. That sell for $200, right? So my selling price per unit is 200. Less what? Less variable expense, yeah, variable price per unit. Variable price per unit. And what is my variable price per unit? How I will calculate my variable price per unit? Total variable cost per unit. Look, total variable cost per unit, that is $120, right? So I will take this $120 here. So my contribution margin per unit is 80, right? My contribution margin per unit is 80. Clear? Okay. Contribution per unit, selling minus variable price. Now we have calculated these two values which is required for this formula, right? So if you want to calculate break-even unit sale equal to fixed expense divided by unit contribution margin, we will do it. Fixed expense, my fixed expense is 7,50,000 and my contribution margin is 80. So what is my units? 9,375. How I calculate? Check it. 750. Okay, I can write here in not the formula, I can write here the values so you can easily judge, right? Okay, from where I got this value, and here I got $80, right? After dividing this value, we got 9,375. This is my break-even units, right? So what is the requirement of this question? Number one requirement, unit product cost. Yes, done. Company variable cost, prepare a contribution format income statement for the year. Yes, done. Contribution format income statement, right? Contribution format income statement. Okay, now third requirement is break-even unit sale. Yes, we have calculated break-even unit sale, that is 9,375, right? I hope you understand.